Hi everyone, welcome to today's webinar with me, Fawad Razaqzada, market analyst with Think Markets. Join me in the room is my colleague Victor. Hello Victor, how are you doing?
Hello, very good. Very much looking forward to this session. Let's dissect what happened on Friday.
Yeah.
And focus on what might happen in the coming days.
Indeed, we've got a few central bank meetings, haven't we? I mean, we had the RBA last overnight, and then Bank of Canada's meeting on Wednesday, and then the East European Central Bank is on Thursday. We also have a handful of macro data releases that could move the market. So all of that to look forward to. But obviously, before we get into that and sharing the live charts, please have a read through this risk warning. These webinars are for general information only and are not intended to provide trading or investment advice or personal recommendations. Any information related to past performance of an investment does not necessarily guarantee future performance. Think Markets shall not be responsible for any loss that you incur, either directly or indirectly, arising from any investment based on any information in this webinar. Please remember that the spread betting and trading CFDs carry significant risks and may not be suitable for all investors. So welcome, guys, to this webinar. Those of you who have joined us live, make sure you ask us questions. And for those of you who are watching a recording of this, please consider joining us live next time. This webinar happens every Tuesday, 11:30 London time. We discuss mainly technical analysis concepts on live charts, on major effects, gold indices, and so on. Obviously cryptocurrency as well now. So you get an opportunity to ask us questions live in the webinar. We also have a Q&A session at the end of the webinar, in case you guys don't ask us questions during the webinar. So for those of you who are live here, you can ask us questions in the questions and answer box, which you can access from the application. So let's get into the thick of it. Then we can start with the dollar index. And the dollar is actually higher today, as you can see. Let's just go back to the weekly chart to discuss the higher time frame first. And on the weekly chart, you can see that the dollar has been stuck in a range. It's been going up since bottoming out earlier this year. So it's, last couple of weeks it fell, still near the upper end of the second kind of top end of the range of recent price action. But the short-term price action has been bearish, as you can see by the last two weekly candles being black. And so it's been all over the place, in other words, making it difficult to trade the FX markets because the dollar is not really trending.
The chop continues.
Yeah. And the choppiness is all to do with people speculating over the timing of the Fed's tapering. Will it be in November? Is it going to be December now? Or maybe next year? Data on Friday was very weak, the employment report. That caused the dollar to fall. However, the dollar has bounced back in the last couple of days, or day and a half. On Monday, US markets were closed. Today, first half of today's session, the dollar's up. Yeah. So it's too early to, in my view, to make a judgment in terms of which direction the dollar is headed based on these two candles. Overall, I still feel that. Well, I was going to say that the trend is bearish because we've broken below this support. So I would be more inclined to sell the rallies in the dollar. But I hear you have a different viewpoint than that, haven't you, Victor?
Yes, my view is different because even the disastrous, I would say, compared to expectations, the disastrous non-farm payrolls report on Friday didn't move the market that much, and the market has managed to claw back. The dollar has managed to claw back these losses that resulted on Friday. And from here on out, the risk is back onto the euro, because last week the euro had this couple of strong days, just because one of the German members of the ECB Council signaled that it might be time to um, start reducing monetary accommodation in Europe. So that I see as an outlier view.
Yeah.
I think that the German members of the ECB have always been notoriously hawkish, and I very much can't see the whole ECB consensus moving into that direction anytime soon.
Yeah.
So I think that a lot of positive news have been priced into the euro dollar, and I think that those people who have bought on these rumors and kind of chatter that the ECB might start considering to pull back monetary accommodation, I feel like they're going to be disappointed, and the dollar is still the best place to be in terms of fiat currencies, at least.
Yeah, I share your thoughts insofar as the ECB is concerned. I can't imagine President Christine Lagarde will have changed her dovish stance much, even as some members you mentioned have spoken in favor of ending the PEPP, or Pandemic Emergency Purchases Program, in early 2022, because of the somewhat recent strength in Eurozone data, although today's data was kind of disappointing. But recently, the Eurozone data has been surprisingly strong.
That didn't help the euro this morning when we had the GDP number higher than expected. Not much has really happened to the euro dollar.
Yeah, the markets are continuing to ignore pretty much economic data. We had really weak German ZDW numbers. Usually this sort of a reading.
And yes, these sentiment numbers are already turning red.
Yeah.
Economic sentiment numbers, and I don't think this is going to end anytime soon, to be honest, because the initial boost in demand has already passed.
Yeah.
A very significant amount of purchasing has been moved up front.
Yeah.
And I think that the economy is turning the corner here, and people are already looking at prices and starting to reconsider their purchases, as they see prices are much higher than they used to be.
Yeah.
So
that could weigh on the economic recovery in the eurozone. Also moving the markets are yields. If you look at the US 10-year, we've seen another attempt to move above the 200-day moving average. Recently, it's been starting to push higher a little bit, and we've gone above the 21-day exponential now, trying to stay above the 200-day. Will it be successful? I don't know. I mean, the Fed has consistently talked down yields and the dollar. So keep an eye on this, because it will have repercussions on precious metals, if not anything else, but also the US dollar. But it's not just the US yields that are moving up. If I show you the Eurozone yields, German 10-year, they have pushed higher as well, above the 200-day moving average. Yeah. So this is potentially not something positive for gold, and we've seen gold prices fall today. UK yields
we've
likewise.
Seen them pull back, and if you show us the gold chart.
Just one point I would like to make before sharing the gold chart is that with Eurozone yields going up, this could be something that may help to limit the downside for the euro. So because we were talking about the euro dollar, that's something to keep an eye on, because we haven't seen a significant fall yet, and it's kind of holding below the 119 resistance. So there is a possibility we may see renewed strength come in the euro dollar as we now kind of move to the second half of the week, and the middle of the week. And we may see renewed weakness in the dollar and renewed strength in the euro dollar because of the rising eurozone bond yields. But yeah, the yields have not helped gold, as Victor mentioned. So if you go to commodities, gold is down 0.7% today.
Yeah,
this is the daily
it
chart.
has revisited the 1834 area on Friday, and it got swiftly rejected yesterday and especially today.
Yeah,
and
so
it's about to trade back below the 200-day simple moving average. So yeah,
that therein lies the debate. Will it go back below?
Good. It's on its way.
Yeah, I mean, the way I see it, forget everything like fundamentals. I'm just purely talking about technicals here. When it dropped big like here, it's had a massive rebound. Okay. If this was a clear change in the trend of gold's price action, surely gold should have not gone all the way back to the top of the range. It's my view. Perhaps somewhere here it should have stalled and gone down, but it didn't. They bought the depth here, testing these levels, offered a little bit of resistance before prices pushed higher. The 200-day offered some resistance, and then we broke above it, and then we held above it, and then we broke above it, trying to take out these highs on Friday. And now it's stalled there again, and it's retesting the breakout level at 1810. So I reckon there is still a good possibility we may see a move up from here, based on what's happened in the past, with price not really showing the bearish characteristics you would have expected following such a big breakdown that happened in early August. So purely based on that, I am a bit skeptical about today's weakness, because obviously US markets were closed yesterday. So it could be that the market is searching liquidity. It's gone down, perhaps in the second half of the day. When US investors come in, we may see dip buyers step back in and push prices of gold and other assets higher again. So that is my point of view. I'll be very interested to see what happens today. 1810 needs to hold. That's the key level of support for the bulls right now, because we have the 200-day moving average coming in there. This is the base of the Friday's breakout. Any move below it certainly on a daily closing basis would be a short-term bearish development, which could then lead to further weakness in the days ahead. So keep an eye on 1810. I have doubts as to whether we will see further weakness in this because of what I've just discussed. So if you see on the shorter time charts, like shorter time frame charts, like the hourly chart, like if you see a key reversal pattern unfold here, like a hammer or something, maybe that could be a signal to look to get back on board on the long side. Is the way I would proceed from here. Alternatively, if you're bearish, then I think you want to wait for 1810 to break.
Let me take the bear case.
Go on then. Enlighten me.
What we had, the move we had in the beginning of August, in my view, was purely driven by poor liquidity due to August markets. And obviously the market didn't, like, that move couldn't have been sustained because of these poor liquidity conditions at the time. And I feel like the real push lower is just starting, and we are about to retest that 1680 area of support. That is the line that has been the line in the sand over 2021. So the moment we close below the 200-day moving average, I'll be starting to put on short positions and basically look for rallies to sell
into.
to sell into, yes, and target the base once again. 1680, 1700. That's where the focus lies, and that's where I think that gold could go in the coming quarters, just because of the relative unattractiveness of gold compared to other assets like stocks and even bonds at this point, as interest rates are moving higher. If they do move substantially higher, as well, can you switch over to the 10-year yield chart, like make it a little bit bigger?
Yeah, sure.
Like,
this one,
perhaps. Yeah.
Okay.
So we're approaching some key near-term levels here on the 10-year, and the 137.50, I would say.
Around here somewhere.
Yeah. That has been a very strong level over recent months. It has proven to contain the rally in yields in the beginning of August and in the end of August. So, assuming we break out of this, and we have already kind of broken out of this declining trend line that you have already drawn there, and we're testing the 200-day moving average once again. So yeah, I feel like bonds could surprise at this point in time, and if the Fed doesn't, and mind you, this is going on while the Fed is buying 120 billion treasuries per month, or perhaps it's still less, because they are also buying some mortgage-backed securities, but still yields are rising despite the fact that the Fed is buying bonds, therefore driving yields lower. So something's going on in the bond market.
Indeed. So today is poking out from this trend line and it's testing the 200-day moving average. I've just drawn here something that could happen. We do sometimes see false moves out of the trend lines, like
Sure.
Like, for example, if I draw something here, see this, it broke this trend line and then reversed and then it went down. This could turn out to be a false break. So keep an eye on the closing prices. If it closes well above the 200-day and this blue line we've drawn, then that would be bullish for yields and bearish for gold and so on, as Victor has mentioned. However, if we see a reversal stick like this, like an inverted hammer, that would be something significant in terms of bond yields, and which could also have major implications for gold and other markets as well. So this is what I'm actually looking out for, because of Victor's last point with the Fed buying lots of bonds, and the ECB is still purchasing bonds, the Bank of England, etc. All major central banks are still intervening. So I reckon the upside for yields should remain limited, given the ongoing intervention by major central banks, which is why I continue to think that gold might go up in the long term rather than go down. So for yields, this is what I would be on the lookout. I'm not saying this will happen, but if it does happen, then you know what to look for. buying gold or silver, and buying the dips in the stock markets until that trend changes. Now, we talked about gold, and we've laid out the scenarios. As far as the short term is concerned, for me, a move below 1805 would be bearish, because that level is. So I'm bullish on gold, right? But you always have to have a contingency plan. You can't just be bullish because X, Y, and Z. But if price action is telling you otherwise, you have to react. So for me, the low that was created in mid last week at 1805 was the last low prior to the breakout that has ultimately kind of failed. So we don't want price to go back below that level if you're bullish. Or if you're bearish, you want to see gold break that level now. If that happens, then as Victor mentioned, you could look to sell into the rallies to take you down to 1800 and perhaps all the way back to 1680 to 1700 and then 1680 over time. But we'll cross that bridge if and when we get there. For now, I think, if you look at the recent price actions, each time it's gone down, the buyers have stepped in and pushed prices higher. Could this be another such scenario? Is what I'm speculating. What about silver? So silver is doing what gold is doing at the moment, which is testing the lows. But silver is testing a key area of support. This shaded region right here was previously resistance. We broke above it cleanly. Price is now coming down to retest. Will it hold the support is the key question. What happens with silver is going to be influenced by price action on gold. So if you trade silver, make sure you watch gold prices closely as well, because gold and silver have a strong positive correlation. Given the break of the trend line, I know there's another trend line that you could have drawn like this. We're back below that one, so you have to be a bit careful. But this trend line, I feel, is stronger because we've tested it a few times on a closing basis before that big breakout happened on Friday. So I would be looking for a reversal stick around the shaded region, possibly as early as today, to be formed before we see another move higher towards 25. Initially, that would be my initial target, ahead of 26, which is where we have the 200-day moving average. But if we get a closing break above the 26 level, eventually we will have our first higher high in place since ages. So that's the line in the sand as far as the bears are concerned. Recent trend has been bullish. So let's see if we get that reversal stick somewhere here. If you're a short-term trader, maybe you could look at the hourly chart, and this level I spoke about is where I would be looking to trade around 24.21-ish. And already we are getting a little bit of a bounce. Let's see if this turns into anything significant. Are we going to see a hourly hammer candle form here? If so, that could proceed another push to the upside. And if we draw the fibs, we may see some fib confluence there as well. We have the 61.8 Fibonacci retrace coming in close proximity to this former resistance area. So this is all it is. This area was previously resistance. We broke above it. And now it's being tested from up above. Once resistance, usually once they break, they turn into support. And if I were a betting man, I would say it's going to bounce from here. So key area for silver to look for a potential bounce today.
Yeah.
Let's move on from precious metals then. What should we look at next, Victor?
Shall we look at indices?
Yeah.
Starting with the DAX, perhaps,
Yeah.
which continues to tread water and get on the nerves of traders.
It is testing support here at 15,870, which was the high from Friday. We broke above it on Monday.
I guess that ZW survey is hammering stocks lower this morning.
Well, yes, and in some ways, negative news is positive for stocks because it means central banks will keep the printing machines running at full throttle for longer than would otherwise be the case.
Central banks will keep the heroin running.
Heroin supply. So Monday's rally was significant, I think, because it ended a few days of downward moves, and the long-term trend line held. This trend is drawn from the lows connecting
this is getting tighter and tighter, this range, and sooner or later it's going to break out, and we're going to have a significant move into either direction at this point in time. So you might want to pay some close attention to these charts, as any breakout up or down, like at this point in time, I'm still inclined to believe that it's more likely for it to be a break up and a melt up rather than a breakdown. I feel like we could see like probably at least 3 or 4% even once this area of consolidation is broken out of.
Yeah, indeed. Like I share those views. I think remaining quite objective. The trend is holding. The 200-day moving average is pointing higher. The 21-day exponential is pointing higher. Price is making higher highs and high lows, albeit it has been in consolidation for a few weeks now. Overall, price action is bullish, if not trending cleanly. So I would still consider the long side, buying the dips rather than selling the rips, even at these levels. Until that changes, as traders, we have to respect price action, regardless of our fundamental views. And price is what pays in the end of the day. So try not to fight it. That's the DAX. I think similar story with all the other indices. The FTSE is also very choppy. It's been at that resistance range again, where it has previously struggled.
Yeah, it's really
so it's not really moving,
struggling to take off.
Yeah, I think the market's just waiting for some stimulus to come in and push the markets in one or the other
the market
direction.
is begging the government to do something more. As if it hasn't done enough.
One market that's caught my attention is the Japanese yen Nikkei index. It's broken out really massively.
Let's talk about that.
I know the markets are closed in Japan now, but the massive move this, which could indicate that perhaps other markets in the Asia Pacific region could follow suit. If you trade those markets. So this is not something to ignore, I would say. And I think it's all to do with the Bank of Japan remaining very dovish, providing ample liquidity for the markets. And there's not many reasons for people to short sale the stock indices at this moment in time.
Let's not forget that the Bank of Japan is also buying ETFs. So
yes, they're buying everything.
It's even more hardcore in Japan.
Yeah, don't fight the BOJ as the message that the Japanese markets are telling us. If you look at the Chinese,
that impacted the yen in some way?
Good question. Let's have a look at the yen. Not really. The Japanese yen is still, against the dollar, it's still intact. The consolidation is still intact. This is what I thought might happen on Friday based on the jobs report that we got. we didn't really broke down from this triangle pattern, but it's early days. Insofar as other yen crosses are concerned, the pound yen is printing a interesting candle on the daily chart today, although it has been pushing up, so the trend is really not very clear. It's found
We're seeing
resistance
some
from this.
signs of risk off across the currency market, with commodity currencies dropping today, and
Aussie dollar.
Yeah, and the Canadian dollar also, the QE is consolidating, but there have been some reversals, and this risk off theme could be tied, guys, to the slowness, the downgrades to the economic outlook for the third quarter. Goldman Sachs has downgraded for a third time, if I'm not mistaken, their view on the U.S. economy for the third quarter. So,
that could be something to hurt sentiment. Although the trend, after the dollar CAD formed this reversal stick right here a couple of weeks ago, the trend has been bearish. Bullish for the Canadian dollar, bearish for the dollar CAD. It fell and filled this gap or this void all the way here, and then it bounced from the trend line before breaking below it, held there for a few days, then it broke down, and now it's retesting that breakdown area from underneath. Could this area turn into support, leading to another move lower? Is what I'm watching out for today. So it's possible we may see some resistance come in, some selling pressure come in as price tests this key level of resistance on the daily chart. And if you look at the, other commodity dollars,
we see the same picture, basically.
Same picture, support the
the QE has been outperforming just because the Reserve Bank of New Zealand has been the most hawkish one out there. And the Australian dollar and the Canadian dollar are obviously, they're performing weaker when compared to the QE. And having in mind the commodity prices that have been rising for so many months in a row now.
Clearly you can see this.
Aussie QE.
I was gonna say Aussie QE has been trending nicely lower over the last several months.
Such a steady trend. You simply cannot.
Even if you don't trade this particular currency pair, if you are bullish on commodity currencies, then you would want to look for long setups on the New Zealand dollar rather than the Aussie dollar, regardless of which currency you're going to trade it against. So, for example, if you're bearish on the US dollar, then going long on the Kiwi dollar makes more sense than going long on the Aussie dollar against the US dollar because of this cross weakening. So,
and speaking of commodities, shall we have a look at oil?
Yeah, we forgot to discuss oil. Oil has been all over the place.
It had this quite decent bounce from the recent lows at 62, just as Hurricane Ida was approaching the U.S. Gulf of Mexico, and production facilities located in the oil production facilities located in the Gulf. We've seen this reversal that was followed through by a consolidation last week. And could we be on our way to refocus on the lower side of this range? I would say most likely yes, because from what I see, the demand for oil could be lower in the first months of next year, and the market is already looking into that area. The current demand is really like well supported and well met. So assuming we don't get any more complications in terms of viruses, everything would look fine. But we appear to be hearing some news about a new variant.
Yeah.
The market is kind of spooked by this, I would say. And let's see what happens. But I wouldn't be buying oil at these levels.
Yeah.
So yeah.
So if you are bearish on oil, maybe perhaps if you miss the opportunity to sell at 70 because that's where the trend line met the psychologically important level, perhaps waiting for some confirmation that would make sense. So for me, it would be a break below this low here, which was the last low prior to price making an attempted a move to break above the recent range, which has so far failed, but it hasn't taken out the low yet. So perhaps waiting for that low to be taken out, then looking to sell into resistance or support levels would make more sense to me rather than selling it right here without any confirmation, because the trend in the last few weeks has been overall bullish after a period of downward move. So I would wait for that bearish signal to emerge first before looking to trade oil short, because right now it's trading at no man's land in my view. So a similar story for the UK oil. It's not really showing any clear trend. It's been a range bound market, so you could trade the ranges, buy at support, sell at resistance. Short-term trading should make oil something to trade if you are struggling for ideas. Let's move on to cryptos because we are running out of time, and I can't see any questions from you guys yet. So I know there are a few of you in the room, so please type in your questions if you have any, and we'll be more than happy to answer those. So cryptos and Bitcoin is inside this bull channel. It has recently broken above the 50,000 level finally, taking out this shaded gray region, which was being tested at the time of this recording or this webinar. And so far, it's kind of bouncing off the lows a little bit. So there's some indication that perhaps today's weakness could be it is already being bought, and that we could see a renewed push higher. So for me, if it does resume higher, which I expect that it might, then a move to 55,000, the next kind of a round psychological level would make sense from here. Thereafter, there's not really much in terms of prior levels to take into account. But 60,000 then will be in focus. Obviously, it's another round psychologically important level. But the 55, the reason I have that on the chart is because it kind of marks the base of this previous breakdown. So we may see some profit taking around that level should Bitcoin get there. On the downside, a move back below 50 would now be considered bearish, especially if it breaks the support trend of this bull flag, this bullish channel rather. So you don't want price of Bitcoin to fall below the trend line if you're bullish. Ethereum is, or Ether, I should say, is likewise printing higher highs and higher lows. I think it's gone so high that I now kind of I'm now expecting it to take out the previous all-time high that was hit in May. If it wanted to go lower, this is where the sellers should have stepped in, and they did step in for a time, but the selling pressure wasn't significant, leading to a breakout from this consolidation range. And now prices are consolidating again around the 78.6 Fibonacci retrace. So if you see bullish price action within this range now, that could be something to look out for in terms of getting on board on the long side. in Ethereum or Ether. A few other cryptos have been making the headlines. Solana is hitting a new record high today. Massive breakout. This has been quite a significant move. So we may see some profit taking around the 200 level, the next key psychologically important level. We're not there yet, but very close to it. Other ones that have moved, Cardano has been quite strong. It's now coming back down to retest these support areas, and we may see some strength come back into this cryptocurrency around this region. And we can see from the daily candle right here that it has bounced off the lows already. So if you move to the hourly chart, you can see some bullish looking candles here, but it's early days. Let's see what happens. But this shaded green region is where I would expect Cardano to start rising from. And there's a question, Victor, would you like to have a look into it?
Sure.
Let
me have a look.
Yeah, while I discuss some of the other cryptos. XRP, not many people are interested in this one anymore. It has broken out of the triangle pattern here, and it's testing the breakout area of that triangle as we speak. So let's see if it manages to rebound from this support area. Okay, so I believe the question is from Alex. Okay,
from Alex, and he's asking a question about Cardano.
Okay.
Do we expect the introduction of smart contracts for Cardano, which is set on the 12th of September to increase the value for the altcoin? There's a summit as well, which might bring in more investment, as it's their biggest summit since their launch. So I would actually think that the introduction of smart contracts is more or less priced in. So it's something that the market is expecting to happen. And hence we got this rally from 140 to almost, not almost, to $3. And yeah, that's the way I would be looking at it from a fundamental point of view, as something that's already priced into the market at the current levels. And as whether we can expect a rally into Q4 for the whole crypto space, we can expect it if interest rates don't go up. That's my view. If rates keep on rising and the market starts de-risking, cryptocurrencies will be the first one to get hit.
Yeah, I think I share that sentiment. Any further questions, guys? Okay, looks like we are good. So let me thank you for joining us today, and please make sure to join us again for the next session. I believe we have a session coming up with yourself, Victor, haven't we?
Yeah.
In due course. So
on the 9th.
On the 9th of September. Okay. So that's
we're going to be speaking about what are the key drivers of the Forex market and what you should be really looking at when you're trying to figure out which way the currency market is going to go.
Yeah, I think I'll be there to help out in that webinar as well. But Victor will be
perfect.
the man who will be leading this one. My next session will be next Tuesday. Our next session, I should say, with myself and Victor. We're gonna update this page, or the admin team is gonna update it with the new additions. And you can register with that one by clicking on the register button. So I look forward to seeing you guys there. Thank you so much for joining us today. It was a pleasure, and I look forward to speaking to you guys again next week. Bye for now.
Speak to you soon, fellas. Bye-bye.